Okay, it says here we have information relating to Mazibuko Limited. Before you do anything, guys, you need to first identify who you are. Who are we here? We are Mazibuko Solutions Limited, all right? Now, Mazibuko is a South African listed company with authorized share capital of 4 million. This one I'll only use it when I get to ordinary share capital. And they also gave me a markup of 150 on cost. And they gave us the latest financial statements. So we know that this is the end of the financial year. If the financial year ends on the 28th of February 2023, when did it start? March 20. You needed to write that down so that when you do your adjustment, you know which period you're working with. Now, they gave us the extract balances from the financial statements on the 28th of February 2022. Which year was that? Is it this year or is it last year? It is last year. And they gave us our current assets as to current liabilities, and the current assets, we're not giving trading stock, but we're giving provision for bad debt. We'll get to that. Then they said current liabilities will be 36,500, creditors control, and they also gave us income received in advance. Guys, this year, where are we? This year, where are we? Aren't we in December? I mean, 28th of February, 2023. And this balance is for last year, meaning that we had income received in advance when? Last year. Can we still have it even now? We can't, because it was a current liability last year. A current liability means that it must be repaid within 12 months. We have passed 12 months already because this belongs to last year. We can still have it. And more than anything, it was supposed to have been reversed. Anyway, I'm gonna continue again. And then for this year, we don't have trading stock for this year. So we have to calculate it, right? And then we have debtors control and everything else. I'm not gonna go through everything. I'm just gonna go straight to my nominals. What do I do with the sales value here? I will put it straight in my income statement. And what must I do with debtors allowances? I need to minus debtors allowances. Let me just check if my income statement is given to me. There we go. So, oh, too bad, guys. It's already there. Okay. Anyway. From that value, what must I do? I must subtract debtors allowances. How much is our debtors allowances that I must subtract there? 393,250. That's the first thing that you have to do. You must do all the time. You first subtract debtors allowances, which is correct. Before I subtract debtors allowances, I am going to reverse income received in advance. That's the first thing I'm going to start with. I will reverse income received in advance. When I reverse it, what do I debit and what do I credit? Do you guys still remember? Normally, when you recognize income received in advance, what do you debit and what do you credit? You debit income and then you credit income received in advance. Okay, so that's what you normally do. When you reverse it, what must happen? You must debit income received in advance and credit the income. But you will notice that the income received in advance didn't relate to rent income. Instead, it related to fee income. So I will need to recognize it as income in the current year. It wasn't income last year, but it will be recognized as income in the current year. So you add it to the fee income. That's what the first thing that you needed to do, all right? What does the first adjustment say? Since I'm done with the pre-adjustment trial balance, what is the first adjustment saying? Oh, the first adjustment talks about, but before telephone, I don't know if we started with shares. We didn't start with shares. It talks about shares, and this is for the year ended 28th of February 2023. The company issued additional shares of 750 at 10 Rand, right? And on the 2nd of January, what happened? The company bought back 150,000 shares and paid the estate of the deceased 1,710,000. Normally, where do you record information about shares? Ordinary share capital. Was it asked in this question? It wasn't asked. Instead, what were you asked? We were asked to complete this table over here, right? It's 2.1. It's the first question. But they were specific. What are we analyzing? We are only analyzing the repurchase of shares. And when we analyze the repurchase of shares, I think they also gave you some workings there for your calculation of shares. Before I can do that, guys, when it comes to repurchase of shares, there's one thing that I first need to calculate. What is it? Immediately when they talk about buyback, it's APPS. But with my APPS, what do I have? I'm going to start in my trial balance. Am I given shares there? I don't see it. But for last year, am I given shares? How much was my share capital there? And how many shares were issued to raise that money? Is that. So that will be our opening. It will be my opening in the numerator and my opening in the denominator. It will be my opening in the numerator and the opening in the denominator. Before the buyback of shares, did anything happen? What happened? We issued additional shares. Now, when we calculate our APPS, guys, I'm going to start with 17,875,000, and I'm going to divide it by how much? 2,750,000. Let me just modify that a little bit quickly so that you don't get confused. The numerator must always have the Rand value. So I will put the Rand value in the numerator because that is capital. It's money that we received. And in the denominator is just units. It won't have the Rand value. So we said 17,875,000 will go with 2,750,000. Did anything happen, guys, before the buyback? You said yes. What happened? We issued. And how much did we receive for that? It's 7.5 million. And we're going to divide that by 750. All right? How did you get that 7.5 million again? You times it by 10. So this is your APPS, which is 7 Rand 25 cents. Again, with that one, I need to put the Rand value there so that you see that it's a Rand value. It's 7 Rand 25 cents. How does that affect, guys? Normally, what happens there? Let's start. I gave you the adjustments. Remember that table that we prepared when we did the shares, when we did share statements, where I started with ordinary share capital. There was this table that I gave you guys. This is the same as that table, okay? Now, let's think about it. When we as a company buy back shares, what happens to our ordinary share capital? It goes down, but it goes down on which side? No, debit side. Because capital goes up on the credit side, it will go down on the debit side. But you will decrease, you will decrease it with bank, all right? But guys, remember the amount that you're going to reduce this by will be your APPS. And how much is your APPS here? It will be 1,887,000. Again, there, let me just put the rand value. Guys. I gave this to the grade 12s as well. As you guys, some of you obviously went to, what do you call that thing in Bloom? CBC. I sat down and I'm busy doing last year's paper. And I'm not referring to any notes. I'm just answering it as it is, based on what I have taught you. It is just based on what I have taught you. Okay. Can I continue, guys? All right. So that is the average price of which our ordinary share capital will decrease by, right? Which is 1,087,500. But for how much did we buy back these shares, guys? 1,700,000 and something. I will stop there. 1,700,000 and something. It's higher than APPS. The difference, what is the difference? What do we call the difference? In this case, what is it? It's not even surplus or deficit. It's a loss. It's a loss, okay? We don't take it to profit or loss. Instead, we take it to retained income. What will happen to our retained income? But retained income will decrease on which side? On the debit side. That's why we debit retained income. And we still credit bank, okay? By the loss, the actual loss here is 622,500. But guys, how did I get that 622,500? Okay. I did not do it here, so I'm gonna ask you guys to give me the numbers. Anyway, I don't want to do it that way. I'm gonna take 1,700,000 and what? 10,000, and then I'm gonna subtract 1,087,500. And what do we get? It'll be 622,500. 622,500. I never really thought that table will be examinable. I came up with it. It is my table. I just came up with it. I just never thought that there's someone out there that will do exactly the same thing. And if you knew that table, you would have been able to answer this question. And this question was in last year's exam. If you forgot, guys, please make sure you go back to the videos on shares because it is right there. Immediately when I introduce shares, it is right there. This table was there. Yes. We will still debit ordinary share capital and credit bank, right? But in the second one, if it was a loss, will retained income be on the debit side? That's the only thing that was going to be different. Retained income was going to be on the credit side. You got it? Okay. Can I continue? I'm done with that one, guys. By being done, what does it mean? We just cross it out. It means we're done. We won't be able to go back there. Let's go to the first adjustment. It says additional information and adjustment that still need to be taken into account. They gave us the telephone account for February 2023, totaling 12,500, had been received, but not yet paid. Not yet paid. The fact that it was not yet paid, what's happening to our telephone account? Is it overstated or understated? Incorrect. Yes. It's understated. Because what must we do with that 12,500? We must add it because it's for this year. We need to add it because it's for this year. Okay. But guys, when you do accounting, that's why I analyzed this. I started with the journals last year and we did the general ledger. For every debit entry, there will be a corresponding credit entry. We debited telephone here. What do we credit? Yes? Accrued what? Accrued expense. And where do we put accrued expense? Trade and other payables. There it is. Just remember, guys, for every transaction, it needs to go to two things all the time. If the second thing is not given, then you don't record the second thing. All right? Accrued is trade and other receivables. You mean income received in advance? By the way, income received in advance is a liability. Oh, this one says trade and other receivables. No, it's not trade and other receivables, guys. You can tell that everything that is there is not trade and other receivables, but instead, what is it? It's trade and other payables. Everything that is there, guys, is trade and other payables. I just forgot to change the heading there. It's trade and other payables. Thank you. Thank you, thank you, thank you. Guys, check what I did to my income received in advance. Is that correct? It's for last year, we reversed it, all right? I'm gonna move on. Can I move on to the next one? The second adjustment, what does it say? Let me just go back straight to it. Insurance expense for the financial year amounted to 88,200. That is our insurance expense. I'm going to go to the trial balance. How much am I given in the trial balance as insurance expense? It's not even there in the trial balance, so I'm going to look at under operating expenses. Do we have insurance expense? It's 96,450. So what is that 96,450? It represents insurance that we have paid. But that insurance, is it correct? The actual insurance is 88,000. So what must happen to this 96,000? It must decrease by 2,000. I don't know what I did there. It needs to decrease by 8,000 what? It needs to decrease by 8,250, right? That 8,250, what is it? You just put it there. But what do we do with it? Guys, what do we do with that 8,250? That we pay. But did we actually pay for the actual expense? Exactly. So what must we do with that extra money that we paid? Since our expense was less, where are we going to add it? It's an expense. It's not an income. Where does it go, guys? But where under assets? It's a prepaid expense. Where do we record prepaid expense? Trade and other receivables. Trade and other receivables. Okay. Prepaid expense will be recorded in trade and other receivables, guys, okay? Excuse me? We'll get to that. Okay, so I'm gonna record it here as prepaid expense. I'm gonna leave it like that. Let's move to the next one. It says the bookkeeper forgot to reverse income received in advance at the start of the year for fee income. I'm not even gonna entertain that because already we have done it. We knew from the beginning when it's there, what must you do with it? Reverse it, okay? But it's nice when they tell you under adjustments that you need to reverse it. Yes, can just reverse it then. Or probably if you want to wait until they ask you to, because sometimes they might have reversed it without telling us. So if they don't tell us, we must assume that they have already reversed it. But obviously here they're telling us that we need to reverse it because it was not reversed. But how else would you have known that it was not reversed? Without them telling you. Ah, come on. You would know. You would know. You first have to ask yourself, where would you find trade and other? I mean, where would you find income received in advance? I nearly gave you the answer there. You're going to find it in trade and other payables. And if it's there in trade and other payables, it means that it was not reversed. So you need to reverse it. Okay. Number 4. A service was done for a cash customer in February 2023. The customer showed a proof of payment statement to the technician, but no entry was made in the books. Highlight that. So we know that we need to make an entry because no entry was made. On investigation, it was discovered that the payment never went through. Highlight that. And Mazibuko Limited is still owed the fee of 6,000. Guys, it means that we are still owed that 6,000. First of all, you need to ask yourself, when we perform a service for a customer, we earn income for that service. What do we call that income here? It's fee income. So that 6,000 rand, was it included in fee income? So what must you do? Add it to fee income. So you're gonna go to fee income and add the 6,000 rand, okay? But was this 6,000 rand received? It was not received. So what is it? Income we have earned, but it has not yet been received. Where do we record it? What is it? Receivables as well. Accrued income. Thank you. You're going to record it there as accrued income. It'll go to trade and other receivables as accrued income. Accrued income is income we have earned, but we have not yet received. It's an expense we have incurred, but we have not yet paid. Deferred is income we have not yet earned, but we have already received. We have not earned it, but we have already received it. That is your income received in advance or deferred income. Okay. Let's move on to the next one. A tenant miscalculated the annual increase and has overpaid for February rent by 2,500. He asked that this be offset against his rent for March 2023. So guys, that is obvious. What has happened to our rent there? Do I add to that rent? Do I add that 2.5 or do I subtract it from my rent income? We need to subtract it because they told you it was overpaid. So meaning that we have not ended, but the tenant has already paid for it. So it qualifies to be what? What does that 2,500 qualify to be? Income received in advance. So you add it to your income received in advance. Guys. This is last year's paper, by the way. This is last year's paper, metric paper. Okay. I mean, you have it in front of you. You have it in front of you. Yes, this is last year's paper. Okay. No. Yes, there's 2023 May. Let's go to the next one. The bank statement was downloaded on the 28th of February and the following still needs to be recorded by the company. Why did they mention that it was downloaded? Do you think banks still send bank statements? No, you have to download it from your app. Okay, you don't need, the bank doesn't need to email it to you anymore. You just have to download it from your banking app. That's it. Okay, now what did we see in the bank statement? We have what? Bank charges. I will stop right there. What must I do with that 2.5? Guys, when you do this, you must always think of the general ledger, I mean the general journal in essence, or the general ledger. It's up to you how you look at it. So we know that we are going to debit bank charges, right? But what do we credit? See, we credit bank. We credit bank. We debit bank charges, but what do we credit? We credit bank. But I don't need to worry about bank here, where we ask cash and cash equivalents. No, I don't need to worry about it. Okay. Okay, let me move on. What did they say next? Interest on current account. Again, then I will debit bank and credit interest income. So that interest on current account, where am I going to record it again? I'm going to record it under interest income. What must I do to my interest income is down there? Okay. What must I do to interest income? I need to add it. Thank you. I need to add it to interest income. Guys, metric is very, very easy. Especially with the notes that I gave you. Guys. Just that students are traitors, you know? If you studied hard, this should be very, very easy for you. So to interest, did you add that 12,600? And then it gave you your total interest will be 363,800. That is your total interest income. But obviously that will also go under bank, okay? It'll go under bank. When we ask for bank here, we were not asked for bank, so I'm just gonna leave it out, okay? Then they say an EFT payment of 85,000 for 4 months, highlight 4 months. Advertising contract, which started on the 1st of February, 2023. You're gonna divide it by 4, but it is for advertising. It means that it went out of our bank account. Did we know about this? No, we didn't. We only found out when we downloaded what? We only found out when we downloaded the statement that there is 85,000 worth of advertising that we paid for. Can I include the entire 85,000? Guys, here you needed to know that that 85,000 is not included in advertising. It's not included in advertising. So you don't do that thing of what falls outside because it was not included. So you only include what falls within the financial year. Yes. But beside that, we received this bank statement on the 28th of Feb. Did we know that we needed to pay for advertising? We didn't know it. So that advertising amount is not included in this 231,000. It is not included. If it was included, we are going to take that 85 times it by 3/4. Because 3/4 falls outside the financial year. Yes, because only Feb is within the financial year. It was paid on the 1st of February for 4 months. So that 85,000 is for 4 months. Okay, so what am I gonna do, guys? Let me just total my telephone. Let me total insurance. And let me total bank charges. But when it comes to advertising, guys, what part of 85,000 am I going to include as an expense for the current year? It's 85,000 divided by 4. And you get the total there. Of this 85, what happened to the 3 quarters? It's prepaid expense. The 3 quarters of 85,000 will be prepaid expense. And where do we record prepaid expense? In trade and other receivables. We include it in trade and other receivables. So the amount that we're going to include in trade and other receivables for prepaid expense will be 63,750. 63,750. Yes. Correct. Which is the following financial year. We don't care about that. It's the next year. Yeah, you all say the same thing. When I do it with you, you understand. There are videos that are finished. It's still IEB papers. Anyway, guys, that's it. I'll try to finish it.